Okay, we are here. We are looking at gold. Currently, we are having a retracement of this previous move that we had last week. So, before we start, just to welcome every one of you, this is Mobile Trading Academy, where we simplify forex trading, helping traders make money from the market. We're all together in the game. Trading is quite difficult or complex, but with proper knowledge, it becomes easier. So, my job here is just to help simplify what is happening in the market, just to give you a clearer picture of what to expect from the market. And welcome everyone that is joining the live. And if you haven't subscribed to the channel, kindly hit that subscribe button and turn on your notifications so you don't miss out when I come live or when I release my next videos. So we are here. The first thing we're going to do is just to identify what is happening in the market at the moment and to see how we can be playing the gold game today. It's obvious that gold is in an upward trend like we can see here. So from last week, we saw this very rapid bullish move that we got from here. Cross here. And we come down here. That was the move that we had from this 841.32 down to up to this 5,176 that it went to just this morning, or on Friday. On Friday. So it's a new week and we're all in. With all type of and market is some of the profits week, we are seeing a shedding of those profits now. This is right going to do today. So I'm taking my time to set up things before we begin. Just taking my time. We'll be looking at the exact points to expect some drop, where we'll be expecting the drops to get to before the next move up, because certainly we are in an uptrend. We are not in an uptrend. We were having lower high, lower high, lower low, lower low, but now we are having a new high that has taken off this previous lower high and also this other lower high. So we're having a very strong bullish move right away. So that is exactly the picture or the situation of things right now. That is the situation of things right now. So we are going to be looking at where exactly we'll be finding the next positions that we will take. All right, just a minute, coming up, coming on. All right, so So the first thing we do this moment is for us to put our Fibonacci before we get our very important trend lines, very important key levels, sorry. We need to see the possible retracement levels of this very massive move, okay? So how do you do that? You know, when you come to the market, like I said, I was just trying to make sure I put everything in order. So, like I said, once you come to the market, first thing you do is look for the immediate trend, okay? So right now, we saw that we were having this massive downtrend, but now we're seeing a recovery of this previous move down. We're seeing a rally. We're having higher highs and higher. We are now having higher lows. Okay, so with this latest move here, we have taken out most of these previous key levels that we have here. So we are in an upward trend, no doubt. You can see that we are in an upward trend, a clear upward trend. Let me just show you. So when you connect these lows here, you see that we're in a clear upward trend. So what do? First of all, let's define the possible retracement levels where this market could retrace to before we start looking for buy opportunity. Okay, that is where we're going to define. Then secondly, the key levels that are very, very important for this market. So we're going to look at that. So which one do we start first? Let's begin with the key levels. So we want to identify the key levels, those strong points where this market could encounter some resistance or support as it moves. So let's begin with the supports. So I'll pick my horizontal lines, okay? So here is my horizontal line. Nearest key level we have here is just right here, okay? That is this point. This former previous high, it was a key level. Now look at this point where this markets, the candlestick bodies, where they all started and stopped. So that is also another area to consider. So you find out that your key level is like a range. So we have this like a range. So this area will be an important area for the market to beat if we must continue in this upward trend. So the market could find support here within this range. Then the next area we will look at is this other one down here. Look at this level. This was another area where the market found resistance when it was going up. So certainly when it's coming down, it's going to find support right there. Okay, so that is another point. So let's look at another one. Look at this point here, this level. Okay, and also this level. So I will mark out those two areas. All right. Okay. So these are very important areas that we must consider coming to the downside. Okay. Coming to the downside, these are important areas we must consider. You could see that this was the previous high that we had in the market, which we've just broken above. Look at it. So it was the previous high that we had, and the market has just gone above it. So the market is right now sitting above it. I know that once a resistance is broken, or once a previous high, swing high, wherever is broken, that becomes a support. So right now, that area will be serving as a support. Now, coming down further, these are also other levels, but I may not bother coming down here. So I may just leave the ones I've identified to the upside to leave my charts neater. So now let's look at to the upside. Where are we expecting price to go next? So to the upside, the first point we have, which is a minor key level, will be at this point. Look at this very level, the bottom of this point where price had consolidation is actually a minor level. It is not very strong, but we need to identify it also. So I will mark that out. Okay, so that will be the next point that gold will be heading to if it begins to go up. Like I said, it was just a support at this point, so it could serve as a resistance, though minor, but it could serve as a resistance as price begins to move up. Okay, so the next point we're going to encounter price go to will be this point. Okay, this was also another minor one. When we get to the lower time frames, you will understand, but this was a point where price also was rejected. But the most important key level we are heading to is this previous high. Okay, this previous high. So actually the major level we have after these points where price is just this previous high. But I have to mark out this because once in a while we could get such resistance as price moves. So that said, here is what our key levels looks like. All right, so this is what our chart looks like. We are right now trading above this area, so this is a support to the price. This will also serve as a support, and this will serve as a support. So those are the areas. So long as price remains below this swing low, the market remains in an upward trend. As long as this swing low remains, because we are now changing our structure. The market structure is now changing from lower highs and lower lows. Now it's now moving to a higher high, because this high is higher than this previous high. So we are now having a higher high. However, we need to have another low that will be lower, that will be higher than this, confirming the new trend. So we're going to be having a higher low somewhere here. So how do we get the points we are going to be laptop or having a big PC? That's the essence of Mobile Trading Academy, just to encourage you to trade with your phones, because you must not buy a PC to trade. Okay, so in an uptrend like this, observe an uptrend like this, you have to place your Fibonacci retracement to at the swing low, and you will drag it to the swing high. That is how you will get the possible retracement levels where the market could be reversing from its correction. Okay, so let's do just that. From this swing low, this is the swing low, we'll take it to this swing high where the market started reversing, and let's see. So here's the swing low. All right, you can always adjust it so long as these dots on the Fibonacci retracement to is, you can always possible 3.6% Fibonacci level is a shallow retracement level. So this is a shallow retracement level. Fibonacci, just a shallow retracement. Then also the 8-point Fibonacci line to have a deeper retracement. That difference is 61%, 61.8% Fibonacci retracement level. So if we could get price come down towards these areas, then we're having a deeper retracement, and that would be the best place to look for buy positions. But right now, these are just the levels we are looking at. 38.2% Fibonacci level is the minimum you should start looking for price to start moving up. So 23.6 may not hold the price. The price may drop far below it into this 38.2% Fibonacci level, or even deeper. Okay, because we have some imbalances with this long wick the long wick of this candle, this lower wick of this candle that has not been retraced at all. So we could be having coming down to this point before we begin our upward trend. So you need to look for any reversals from anywhere here and then join the market to the upside. So while we're looking at that, okay, when we're looking at that, one other thing you may do is to connect your equidistant channel. All right, so you can connect your equidistant channel from this low to this low, then connect it with this this high here. Then that will give you the next the we now have our equidistant channel also here. So that tells us that this is the bottom of the channel and this is the top of the channel. And right now, like I said, any move towards 38.2 Fibonacci retracement level and 50.0 Fibonacci retracement level should be offering us a buy opportunity around here. And also, if we get deeper to 61.8% Fibonacci level, that would be a very good opportunity because that would be a deeper retracement. So in that case, there's no need looking for buy opportunities right now here because that would mean buying high. And also, selling will not also be the best because while you can sell from here, that would be a counter trend. You can actually sell from here, but you're selling into a support. So here is just a support area waiting for you here. So selling right here will not be altogether good. However, if you're a counter trader, you like counter trend trader, if you like counter trends, you may take that may be a risk to take, but is your support area, which I can also add a horizontal a rectangle to point that area out. So you can see that that's an area of interest. So selling from here, be selling into that area. However, one can actually, people do counter trading anyway. You can do a counter trading if you wish, but not advisable because you should be asking what's the risk reward ratio. You're shorting from here and you want to put your stop loss over here and you're targeting here. The risk reward ratio is almost 1:1 or just a little above that. So that is not altogether wise. While it is better for you to allow the price to come down to these areas we have marked out, then our target will now be to the top of this channel. First of all, to this key level we've identified. That means if we get any pullback into this area, the next target will be this 5,235 area. That would be the next key level we'll be targeting. Then the next one will be 5,448. That will be the next one that we will be targeting. Then just a minute. Then the next one we'll be targeting will be this one. All right. So this one will be the next one. We'll be targeting 5,593 area. So what's the best thing for you to do? Now we have just simplified our trading. We've marked out, we've identified a breaking structure. We're having lower highs and lower lows. But now we've seen a change in structure. We are now having a higher high. So we need to get the price come down to give us the next lower high, the next higher low, sorry. We need to see the price come down anywhere here to give us the next low, which will be higher than this recent low. And from there, we'll move up to this high, to this point, then to this point, then to this point. So I've been able to show you exactly my trading plan for this week. And if you like the content, if you want to remain profitable, you can reach out to me, and always ensure you watch the channels, because my goal is to find a way to help you gain clarity from the market, and also help you simplify the whole process of trading. Now, like someone will be asking, why will you not be selling from here since you see that the price is coming down and you know it will come down to this 23.36% and also this 38.2%? The reason is just because I am seeing the market coming into a support, and also the risk reward ratio will not be too good for me. So I'm looking for the best risk reward ratio, because that is how you protect your capital and also your equity. So if you want to learn more, ensure you watch more of my videos, and also you can reach out for a coaching. Thank you for watching. My recommended broker is right there. If you're looking for a very good broker that you can trade with, my recommended broker is right there on the description page. You can check it out. Trade confidently like a pro, and they offer you the best services. So I'll be calling it a day this hour. I have shown you everything, so you can work with what I have just pointed out and find your trading opportunities to trade. So see you